Hey folks, welcome to another episode. We wanted to kind of give you where we are post FOMC and where we were with this megaphone pattern. We had said previously that 651 was a floor, 676 area was an area of interest if it defended and went long, 680 went long, and 690, was our high-end target, which we'll take a peek at the chart. But if you went long and you were very smart, we did short a little bit. I sold some call spreads against the pop of FOMC of retracement. And then today we sold some puts going into long into the weekend with FOMC over. Market now knows what's going on. And then we don't have CPI until next week. And we're into that center rally. So we're looking at a next pivot about December 23rd to see, will that be a low? And then we go longer into the January 10th pivot, or are we topping out? CPI brings us down. If you like this content, please subscribe, like, comment below. Let us know any tickers you want to see in particular. We're open to any ideas, or you can join the Discord. But let's take a look at the charts and see what's going on. So here we are right here, butting up to the 691 AI trigger that we had, and we're blowing through all the dark pools, 680, 691, and then the 712 up here. But this is the top end of the phantom print. So what would I do? If 691 comes in, I'll start selling call spreads with a little bit of time, because we have a pivot on the 23rd, but my downside isn't until at least January 10th. So I would go, let's say 45 days out. If you have enough time, go a little bit higher than that, not financial advice. Or if you decide you want to still go along, let the market come retest something in the 680 area. 685 would be ideal if it holds on Friday, going into maybe a CPI, which might be fine. CPI, if it's 3.1 estimate and it comes in at 3, the market's going to rally saying that it's hot but not hot or whatnot. But this is the nosebleeds. You want to be careful. If you're going long, we're selling premiums up until we hit it. And then once we hit that dark pool, when VIX is very low, there's the saying, look out below, then we'll take the short here to be able to reject here and then come back down into the January 10th, 12th pivot. So I'll just buy a little bit more time. I'll sell the bull credit spread against maybe like January OPEX into the drop into January 10th. But my protection will be that if we drop early, right? If we drop anywhere around here, 685 or 687, or even, the 670 area, which can turn into, again, it could turn into just the ending. People will read this as a double top, possibly come down to the 670 area, which is support, and then continue on to 712 into February. And that would make an inverse head and shoulders.